Today I'm going to be sharing with you guys the unicorn setup. In my opinion, this is the holy grail trading setup, the absolute best bread and butter setup that you can look for in the markets. And I'm going to go ahead and walk you guys through all the different steps that you need, all the different things that you need to understand in order to find these, and ultimately what they look like. And we'll show some real-time examples from today on both the lower time frame charts as well as the higher time frame charts. So with that being said, let's go ahead and dive in. So just to be clear, before you guys even start looking for this, I guess you can call it pattern in your trading, you have to have some prerequisite understanding of certain PD arrays, primarily just two, which are going to be breaker blocks and fair value gaps. And as long as you understand those, you will be able to find success with the unicorn model. Just keep in mind, if you don't understand what breaker blocks or fair value gaps are currently, pause this video, stop, go figure out how to learn about breaker blocks and fair value gaps. They're in pretty much almost all of ICT's videos, as well as previous content that I've put out. So just make sure that you guys understand what breaker blocks and fair value gaps are, and then ultimately you will be able to identify these setups on your charts. So not to go overly into it, but just to walk you guys through what this actually looks like. A breaker block is basically when you have a pattern formation that looks similar to this, where you have a low, a higher low, and then a higher high. This high point here, which is going to be the most recent bullish candle, and this swing high is going to be considered a bullish breaker block. And then it's going to be the inverse in a bearish model, which is going to look like this. So same concepts. This would just be a point of resistance, for example. So you have a swing high back up here, then you have a low, then you have a lower high, then you have a lower low. So this lower low here is also your break in market structure, for example, and then you have a retest of the breaker and then a lower low. Now, what makes this ultra precise is when you have a fair value gap that overlaps with that breaker. So for example, you would have a fair value gap in this price action run here, and then you would have a fair value gap in this price action run here, overlapping with a breaker. Now, this gets even more high probability if you understand more ICT concepts and PD arrays. For example, you can have an overlapping fair value gap with a breaker inside of a 1 minute order block. So this can go super deep, but keep in mind, to keep things super simple, this is what you're looking for, and these are the PD arrays that you need to understand in order to find success with this model. So let's go ahead and take a look at some examples inside of the actual charts themselves. And the first one that we're going to look at is going to be on a daily chart, because I'm sure most of you guys may spend more time on the lower time frames, but I also just want to show you the power of identifying this on a daily time frame, for example, and ultimately, how profitable it can be if you're trading this on a higher time frame versus glued to the lower time frame charts, which I know, I'm a victim of this myself. I trade primarily on the lower time frames. But if you have the patience to hold or anything like that on a daily time frame or longer term objectives, you can make a lot of money with this on the higher time frame charts. So I'm going to go ahead, before I draw anything on the chart, I'm just going to do a little ICT test. So pause the video right here and go ahead and figure out where on the chart the unicorn setup is, and basically just comment below if you are correct or not correct. Or if you don't feel like dropping a comment, drop a like if you were correct. And if you weren't correct, go ahead and drop a like as well. So let's go ahead. We'll go ahead and talk about it. This formed on October 11th. So this is going to be your breaker pattern here. So you have a swing low, a swing high, a lower low, and then the market makes a higher high. Now, this is kind of a nuanced setup. So if we actually zoom in here, you can see how this is a little more nuanced, is because we have the breaker block that's here, which is going to be a bullish breaker. Now, most of you will probably be looking at this and not look to take the trade until the actual breaker is closed above. The more experience that you gain, you can trust, when price is actually working inside of a breaker in terms of an execution versus waiting for it to close above. So me, for example, I would consider this a unicorn entry um, simply because we have this small little fair value gap as well. Now keep in mind this is on a daily chart, so this will be much larger if we were on a more zoomed in time frame. But what we're looking at here is basically a daily unicorn setup. You can see the bodies of the candles respecting the fair value gap, also working the entire breaker here, but the bodies of the candles do not close below. And ultimately we have this fair value gap nestled inside of this bullish breaker, which makes it much more high probability. Now, one thing that you can note for this is the target would be this swing high, right? Now, once we get above this, obviously we could be looking for targets to the left as well. Let's go ahead and map this out. So we'll just clone this one, and then we'll drop one on this high, and then we'll go ahead and drop one on this high as well. Now, this is the March contract. So keep in mind, like, it's only going to have limited data. Now, if we were on the continuous chart, it would be a little bit different. But if we're looking at this on a daily chart, this is take profit 1, take profit 2, take profit 3 up here. So we have 16,067, 16,324, and 16,420. Now keep in mind our entry would be basically right here at the fair value gap high, which is inside of just below consequent encroachment of the breaker. With that being said, that is the unicorn setup. However, you can take any trade inside of this bullish breaker for it to be a valid setup looking for a continuation higher. Now, most of you are probably wondering, if you take the trade here, wouldn't your stop have to be way below here? Not necessarily. For me, I would actually start off with my stop below this candle's low because I would want to see this bullish fair value gap be respected. Ultimately, we shouldn't close below the daily bullish breaker as we didn't, which if this happens on this daily candle, once we closed above it, I would have gone ahead and trailed my stop right here to the swing low of this daily candle, and that would have trimmed risk considerably. So if we go ahead and frame out what this actual trade setup would have looked like, we would have had an entry right here on the top of this fair value gap. So we can go ahead and drag it on. It would have been on this candle here, which would have been November 9th. And the stop loss to start would be here. And the full target would be right up here. So this is a 2.24 to 1 risk to reward. Now, once this daily candle closed, so keep in mind this is only 1 day after executing the long position, we would have been able to trail risk right below this low, which would make this a 10R trade. Now, this is the power of understanding stop loss placement and knowing how to control your risk. And then as this thing starts to trade higher, you can trail your risk even tighter, stop to break even below the daily lows, and then that will allow for even more profits and obviously no risk once you're at break even. So huge bonus whenever you're trailing your stops. And you can even see how this works on a daily chart. Now, if we map out the actual execution entry level, which would have been here at 16,490 roughly, and then we measure how far this is here to first target, we would be at 573 handles. Yeah, 573 handles or points. And then if we look at second target, that is 873, so another 300. And then final target would be 964 handles. So pretty significant move there. And you can see this is a unicorn model that formed on the daily chart. Entry would have been November 9th, and full target would have been hit this day here, which would have been December 11th. So just a little bit longer than a month for this to play out, but keep in mind, day one, you would have been floating in profit. First target would have been hit on day 1, 2, 3, 4, 5, 6, 7, 8. Day 8, you would have had second target delivered, came close to it at the end of November, and then ultimately the target was delivered December 11th. So This is something I highly recommend that every single one of you watching this video go and back test. This is the most precise model I have ever seen, I have ever tested. It's the most precise model I use in my personal trading, and I highly recommend it. Now, let's go ahead and drop into a lower time frame. Same thing as we did before. Go ahead and pause the video, see if you can identify the unicorn setup that formed today, and I'll give you 3 seconds or so. 3, 2, 1. And if you guessed this as your breaker with this as your fair value gap, you were correct. Your entry would have been provided here at 10:30. So let's go ahead and we will outline that. So you can use this single one candle here, or you can use these two consecutive up candles. Since we're on a 15-minute chart, these two blended together would be a 30-minute, and we have an overlapping fair value gap perfectly inside of this bullish breaker. So we'll go ahead and outline that as well. And you can see price dips into it perfectly at 10:30. We closed above it, swept the low, broke market structure, just bread and butter, beautiful setup. And this would have been your first level of buy side liquidity, or at least my first level of buy side liquidity. However, you could have targeted this one, and you could have targeted this one as well. This was the first target, and the second target would have been previous day's high, which you can find here. Now, if we go ahead and frame this, we have our entry that would have taken place right here. Stop loss would have been below this candle's low. The reason we would have used this candle's low is because that is the candle that started the fair value gap, as well as we have a breaker above us. So price, if this is going to continue higher, should remain above the breaker. Therefore, our stop should be safe down here. Okay. First target is going to be this high. Keep in mind, it could be this high as well. The first one that we marked out. So let's draw that. So this would be a 1-to-1 initially. Now, once that target is cleared, you can move your stop to either the low of the breaker or the most recent swing low that formed, which would have been here. Now that makes this trade a 6-to-3 or 6.3-to-1 once the risk is adjusted. I'm going to go ahead and keep the stop here. And like I said, this would have been my first target up here, which would have been the high formed in London. And you can see here, this is a 2-to-1, perfect bread and butter trade. Again, could have trailed stop to either the breaker low or the swing low formed inside of the unicorn setup. And the full target would have been 2.71R-to-1. So absolute beautiful setup that formed here on the 15-minute time frame today. This is the NASDAQ chart, by the way. We're on a 15-minute time frame. So again, you can backtest this. It works on any time frame. It works on any chart, any pair, any asset class. This is basically in the charts all the time. So you want to backtest this. You want to look for it. Super, I would say, profitable model. If you look for these conditions, specifically the breaker block with the overlapping fair value gap inside of it, easily 85+% strike rate with this model. Highly recommend it. And yeah, all I can suggest is you guys go actually backtest this stuff for yourself. Now that we're at the tail end of the video, I also wanted to bring up something that you guys might notice on my charts as well. These are a couple of indicators created by a few friends of mine. They are all based around ICT concepts. You can see here that I map out the Asia range. I map out the New York Midnight Open, the 8:30 Open, the 9:30 Open. And while I'm on a 15-minute time frame here, I can also see the bigger picture of the most recent 4-hour candle delineated by 4 1-hour candles, all the different 4-hour candles here over the past day, which is 6 of them, and then the daily candle as well. Now this helps me tremendously. Instead of having to flip back and forth between tabs, I can just keep basically one chart on my screen, and then I can just toggle between the different time frames. Everything in terms of the indicators and all that is already set up, so I can just see this super precise. If you guys want a copy of this indicator, comment ICT indicator below this video, and I will work something out to be able to get you guys a copy of this indicator as well, so you can use this in your own personal trading. With that being said, this is the end of today's video. I will see you guys in the next one, and I hope you enjoyed it. Take care.